The posts today were insane on Twitter and Truth Social. On one side of the fence, right at the beginning of the onset of the session, we had a nice little tiny bullish hit. Market sold off into Asia session lows and then completely recovered all the losses from the day. So let's, before we jump into the technical aspect of things and I go over the three positions that I took today, what I was seeing in the market, let's go over what I was saying at the beginning of the session. So here's the post from 8 a.m. this rising. And I said, and right now the landscape has not changed. So as we roll into tomorrow, remind you, yesterday we had our first fundamental Zoom call. Go back and watch that because nothing has changed. We ran through if-then scenarios. We covered NFP. So we did an NFP prep yesterday. We looked at the data that's set to come out this rise or in the next couple of trading days. Keep in mind, for those of you all who missed the call yesterday, um, it's a holiday week. So Friday is going to be shortened trading hours. Just be mindful of that. Then July 4th weekend, of course. All right. So as we begin the week, risk assets remain relatively stable despite an eventful weekend. The total cryptocurrency market cap continues to consolidate slightly under the $2.5 trillion threshold, while Nasdaq is holding above last week's lows. Although volatility picked up over the weekend due to renewed geopolitical headlines, markets have so far avoided a significant risk-off reaction, suggesting investors are waiting for more clarity before committing to a directional move. Our primary focus now shifts towards two key catalysts ongoing: U.S. Iran negotiations and this week's U.S. labor market data, both of which have the potential to determine the next major move across stocks, crypto, oil, and the U.S. dollar. Our primary focus now shifts, or excuse me, President Donald Trump announced Monday that the United States and Iran are expected to hold another round of talks in Doha, which were confirmed today, which once we get to the portion of today's call is one of the bullish drivers for today's move. Qatar, after both sides appeared to step back from a series of military strikes that had threatened to derail recent peace efforts. Iran has requested a meeting. It will take place tomorrow in Doha, Trump posted on Truth Social. While Tehran has publicly denied that formal technical negotiations are scheduled, multiple sources familiar with the discussion indicate that technical teams are expected to continue working while implementing a preliminary agreement reached by both nations. Communication channels remain open, and diplomatic efforts are continuing behind the scenes despite conflicting public statements. And if you guys remember in yesterday's fundamental report, I mentioned any positive rhetoric around the current negotiation standpoint that continues is likely to drive some formal recovery in risk assets, or at least keep them from selling off further, right? I even said here for you all, if negotiations continue to make progress, tensions around the Strait of Hormuz ease, oil prices remain contained, and this week's labor market data comes in soft enough to reduce expectations for additional Federal Reserve hikes, risk assets would finally have a catalyst that they would need to start a broader recovery. Lower geopolitical risks combined with easing monetary policy expectations would likely support renewed buying across both equities and crypto. And then fast forward to the later part of today's session, we saw that confirmation today. We saw that Iran is requesting to meet, that they are going to meet sometime this week, albeit there are conflicting headlines from these, you know, Instagram and Twitter posts that just constantly flip flop on the news. Underlying, the market is taking it as progression instead of continued escalation, right? Remember in the report yesterday, I said that it seemed like the market was perceiving the weekend events as threats and not confirmation and continuation of escalation, right? And so that is where we had that bullish open yesterday. And then the market, of course, continued with that overall momentum today. So let's go over that in detail from top down. We'll go over the 15 minutes and then make our way down to the second chart for execution. Today was another beautiful, absolutely crisp ass, beautiful buy delta held pattern, y'all. Like I'm talking about literally point for point what we talked about in Friday's Zoom call last week. Same exact move played out. Don't believe me? Look at this. Here's Friday's move last week. So we had the lows liquidated. This is the delta, by the way. So we're again going to start today's analysis from the delta. Mind you, as always, Scalper updated the deltas and the dark pools prior to the session. So this is all forward-looking information, even though now we're going back hindsight, right? From the anybody outside looking in, let's look at the levels today. So we go to the coordinates, 29149, 29314. That's why these levels are so dang important to have on your charts, especially if you guys are some of our monthly members. And then we come into the section, the S&P 500, and we can take a look back. This was from Wednesday, June 24th. Today is June 29th. And we can see here we have the deltas 29,149, 29314. And so fast forward today, those levels played another key significant role. So this was Thursday, Friday's price action where we saw the first delta held, sweep beneath the low, that then leads to a new structure leg higher, retest of that base, move to the upside that continues with the overall bullish move, right? Then coming into yesterday's open, or for us today in America or in the United States, this was the open Sunday. This was Asia Monday, and we can see the same pattern. We see a low swept, new structure formed. Then during Asia and London rollover, that trend continued and we created new bullish structure. So now today, coming into this New York session today, all right, this is what information we had to assess. We had the ability to assess that overall we are seeing delta helds or buy volume come in and defend the top of the delta at the New York session, at the Asia session open yesterday. That created a new bullish environment. So here you can see from the low now up to the high where we started today's New York session. This is now our most immediate range, right? This has now created a new structural price leg from session to session. And so coming into this morning's session, I was seeing this price action, and then I started marking off areas of interest to continue to be bullish above as long as price remained above key areas of interest during London or Asia session lows where buyers previously existed. So on the 15-minute time frame, my first AOI was London session lows. I simply highlighted the down move before the up candle during London session that created the low of London and led into the rollover prior to New York session open. And so that was this 15-minute candle body down to the wick. I extended that over to the right-hand side, and that became my first area of interest where if buyers defended this area, I would start to facilitate some buys to take price into premium ranges, where my premium ranges were session highs from last week and New York session highs from previous weeks, right? Which also aligned with the dark pools to the upside. So that was area number one. Area number two, I was looking at all of this as internal liquidity, where if they did break London session lows, we were most likely going to start to see them come and target this area here as internal liquidity and target Asia session lows from the open. So I skipped out on analyzing these lows, albeit I monitored price action when we came into them. I straight up just highlighted the Asia session lows from the candlestick wick to the body and extended it over to the right-hand side. And those are my two AOIs for buys today for New York session. And noticing as well that the AOI from Asia session also fell in line with our institutional delta. So that for me became a key area of interest today. Jumping down now to the 1 minute time frame. So I took 4 positions today, all 3 buys. I told you guys I skipped out literally on the entirety of the sell, primarily because after this last buy and my take profit was hit on the buy, I literally got up after that. I thought that it was going to be off to the races. I accidentally sold out of my position because I took profit here, but I didn't realize I didn't change the contract size and leave one runner. So it closed out the whole position. I was like, cool, I'm fine. I'm up for the day. Let me get up, go make my breakfast. So literally the entire sell-off, I was downstairs just cooking up my eggs real fast. And then when I came back from cooking my eggs, price action was at the dark pool. And I was like, okay, cool. I'm going to wait. And if we can come into those Asia session lows, then I'll start to look for a delta held on the lower time frame and see if I can buy scalp. Right. So let's go over from these positions top down. Now that you all know my lower time frame AOI or my higher time frame AOIs, just to recalibrate, we're now on the 1 minute time frame. This was that 15-minute AOI from London. So this was London sessions low, and this was that Asia session low. So that you guys know where we're at in terms of price action, because now we're fractal. We're on the 1 minute. All right. And then obviously, of course, to the upside, these were my premiums here and here. All right. So that's how all these drawings and markings come and correlate down on the 1 minute. So with that being said, at the session open, you can kind of see my overall thesis. Here is the 8:30 a.m. open candlestick. Price action had come into my overall London session low area. And so sure enough, once that happened and we violated London sessions low, I dropped down to the seconds chart and I started looking for bullish order flow or bullish confirmation. which is, let's go over here. After we see a sweep of a low, I want to see it turn into some form of a pressure point setup where right after the sweep of the low, which we get here, you can see London session low and area of interest is swept. Instantly following that, I want to see higher low, higher high, higher low formations. And we got that. So this was a good pressure point setup at the beginning of the session. Here's the pressure point. Here's the A. Remember, I told you guys in a previous Zoom, this is one of my most favorite setups. Here's the A. Then price instantly after creating a higher low, breaks a previous resistance. Here's your B, or break of structure. And you're looking for the previous resistance to start to act as support. Notice at the same exact time, we had a triple moving average crossover with this bullish candle. So what I did is on this pullback or this bearish candle, I started to trail it with a buy stop. Buy stop was activated on the next bullish candle. You can see we had that moving average crossover confirmation. My first initial stop loss was right beneath the bearish candle, and I took profit after the highs were violated over to the left-hand side. So that was my first buy scalp of the day. Very clean pressure point setup. And then we started to see base retests. So my next trade was very simplistic. I now knew that we were operating in this new A to B range on the lower time frame, while also operating in London sessions discounted range, which was here. Keep in mind, this was that 15-minute AOI. And now if I extend the 15-minute AOI out just a bit, or where London session was buying from, what do you all see that I noticed here? We came back, we retested the strength of those buyers that were aggressive in this candle, and we know we're aggressive over to the left-hand side from where London was buying. And we can see clear buyer defense here. As soon as we come into the area, we have a bullish reaction. That bullish reaction is enough to violate the 50 EMA. So instantly following the retest, I started looking at this as an internal pocket of liquidity underneath of the low. We're still operating in this bullish range from A all the way up to B, or this now new 1, this now new 2, and taking my fib from the low to the high, we were operating in a 50% discount here. So for me, that's not enough to pull the trigger. Once we came down into 62% and we see the bullish reaction, I started trailing this bearish price action with my buy stop. So my buy stop was here. That buy stop was executed upon this break of structure. It also resulted in a moving average crossover. That moving average was retested. My first initial stop loss was beneath the low. After price held above the EMAs, my stop loss went nice and tight right beneath the wick. And that was all she wrote for this second trade. After we created a new structure leg, I started taking profit from this first trade, or excuse me, from the second trade, and started trailing my stops up. And I think this pullback here took me out. All right, so that was the second position. Third position now, I was continuing to just follow the trend. So I started just highlighting bases on the pullbacks. I noticed that this was the last down move before the up move that broke this structure high. So now we can again focus on the 1, 2, 3, or the continuation pattern. Here's the last down move before the up move that leads to the break of structure, breaking all this previous bearish structure. So then this is where I took my new fib from the low to the high, waited for price to come down into the premium. Now, because this is where trade management comes into fruition and not chasing. Think about this. I've already executed 2 trades today. So I was up for the day by this point. So now moving forward, what do you think my goal is as a trader? Can somebody tell me? If I'm going to execute another trade, I want the best what?
Protect capital.
Exactly. I want the best risk to reward. So when we came, this is why I did not execute the trade on this pullback here, because we only tapped into 70% premium. So for me personally, because I was already up, I was like, I'm not taking a trade here because it doesn't give me a good risk to reward. It doesn't give me the best risk to reward. I'm not executing a trade until we at least come into 79% premium or discount of this most recent bullish move, which will then give me a much better RR trade. And sure enough, having that discipline embedded into myself paid off. So as soon as we pulled back into 79%, I started trailing this bearish candle with a buy stop because it gave me a much better RR. As soon as these two bullish candlesticks hit that buy stop, stop loss was nice and tight beneath the one. As it went into profit and poked back above the EMAs, that is then when I went ahead and I secured the trade by moving my stops into break even. And as soon as we violated the high in this choppy price action, I'm pretty sure, if I'm not mistaken, Camille, we closed this trade right at the same exact time. And boom, right in that consolidation, that's when I was out. I was like, okay, cool. Buyers are having a hard time breaking this for now. I'm going to go ahead and I'm going to start taking some profit. And then sure enough, we dumped. And this is when I got up and I was like, cool, I'm done for the day. Right. So then that was the first portion of today's New York session. I got up to go make breakfast and I came back to price action when PA was around the dark pool. I think it was this first initial reaction that we had from the dark pool at the 29,450 when I had came and I sat back at the charts. So I was like, great, I see the sell-off happening. I'm not going to take any positions right now because for sells, for me on the higher time frame, right? This was the premium sell area. And so for me to take a position here this late into the day, already being up, if I was going to sell from here, safe stop loss on the higher time frame would be above here or above here. And that for me doesn't give a good risk to reward. So I simply waited inverse instead of trying to sell and chase, like I was explaining a second ago when we did the psychology breakdown. I waited because I knew that this was the Asia session low and the Asia session low coincided with the delta, right? So I simply just waited. I waited for price to come down into that area. I sat, I ate my breakfast, and then sure enough, this honest to God, having the patience to wait for this trade today felt so good. Watching it play out in real time, I was literally sitting here eating my freaking eggs and I was cracking myself up. I was like, this is hilarious. Because I watched those Twitter profiles post massive dump in stocks today. And I was like, oh, they don't even know. And then if you go into the chat, I said to you all this rising, let's go into the Discord. Where is it at? Here. I said if buyers take out 29,680, this thing is going to go back to New York highs, right? So I was just laughing my ass off that people on the internet were saying, "Oh my God, stock market's bearish today." Heck no. Little did they know we tapped straight into a buy delta. And so coming into the buy delta now, this is one of the trades I saw all you guys catch. Beautiful buy delta held on the higher time frame that coexisted with the lower time frame. So now let's forget these three previous buys. And I want to show you guys how the overall higher time frame coexisted with the lower time frame buy delta held. All right. So we have Asia session lows here. We highlighted those bases at the beginning and extended those over to the right-hand side. That became our last line in the sand for buyers to defend. That led to a new breaking structure or a new A to B move. And this gave us our new bullish range for today's New York session. You can see the intent of the market makers. All of these areas were internal pockets of liquidity. They came, they took all of that liquidity out of the market. They used all of that to propel the markets higher. Buyers then defended, trapped those sellers, and became aggressive and pushed price back to the upside. This was a beautiful 1, 2, and 3, or the retest delta held formation today during New York session. Cannot get any more clean than this. Like, this is literally the bread and butter setup in this community here. And it happened on a freaking Monday. It's crazy. It happened on a Friday and then happened on a Monday. Like, same exact confluences. Wild to see. But what I want to show you guys is what Camille was trying to go over on Sunday's call is you want to see the delta held on the higher time frame all the way down to the seconds chart. So we know that on the 15-minute, we are in delta held territory, right? We have the 1, we have the 2, the break of structure, and now we're looking for the pullback entry. So now zooming down into the 3, I'm going to show you all on the seconds chart. which is why I executed the trade. We see these same exact confluences. We see a sweep of a low or the last low that then leads to a break in structure or a new high or a new bullish structure, which then gives us the green light on the pullback to take a good risk to reward trade upon the assumption that buyers are likely to defend this area of interest. So we come down to the 30-second chart. We can now see that this is that 15-minute circle. We can get rid of it. We now know that this is that 15-minute 3 AOI. And we can also see the reaction on the lower time frame from the top of the delta. Sellers make their way into the top of the delta. Instantly, when we touch that, we immediately see a bullish reaction that breaks previous bearish structure. So here is your first BOS. And so the sellers that previously trapped buyers, as you can see here, these are all trapped buyer candlesticks. They tried to defend that area, and you can see the seller that became aggressive. But what do you notice? Instantly following that seller's aggression, it does not break into a new structure low, and we immediately see it get absorbed with buy volume. Then we see more sell volume come in. And then here's the first signal. We see a higher low that then leads to a new structure high. So that for me was the green light on the 30 seconds chart. We did not see a EMA crossover, so I jumped down to the 15 second to get that confirmation. And sure enough, on the 15 second, it was so freaking beautiful. It is literally the same structure on the 15-minute time frame. Here's your one, here's your break of structure, EMA crossover, two previous bearish structures broken. So we have check, two previous bearish structures broken, check, EMA broken, and check, bullish reaction on the higher time frame from a discounted area from a previous Asia session. Can't get any more cleaner than this. So I simply highlighted previous bases, looking at this as an internal liquidity pocket. This was the last down move that led to the new break of structure. So I highlighted that down candle or that trapped seller, extended it over to the right-hand side, and waited for price to come back down into it. Upon price pulling back into the 3, I simply trailed this bearish pullback with a buy stop. These next bullish candles entered me into that buy stop. Stop loss was nice and tight beneath the low, and it was literally instant profit. As soon as we retested the dark pool at the 29,450, that is when I went ahead. I took some off the top because we started coming into the premiums over here to the right-hand side. That's then when I sent you guys the message. If we broke whatever level I was saying at the time in the morning, then price is going to freaking soar. And I was done for the day. I literally just let the rest of this ride. We came up here into this trapped buyer, and that is where I closed the majority of this trade. This was a solid 267-point trade for me. So I was like, cool, that's enough for me today. Even if this thing runs higher, I'm fine with that. Then during this entire pullback, I was just saying to myself, I'm happy that I closed this trade and didn't become biased, because even if this thing does run higher, you don't really know in the moment if your psychology is going to be able to handle something like this, or if you're going to get skeptical, try to close out the position, change, reverse. And I know that I'm susceptible to that, and I already had a phenomenal day. So I chucked this up as a win, phenomenal execution, even though I definitely could have held this trade longer. I'm not going to sit here and beat myself up, because it was so great to feel this come into fruition and watch it all play out and react to it in real time. Like seeing the delta held on the higher time frame, knowing what I said to you guys about the fundamentals before the session, that we were seeing an environment that was supportive of risk assets. Couldn't go wrong today in the community, in my personal opinion. And if you did, now let's open up the table. Bring your trades to the discussion. If you did not see price action today through a clear lens, let's talk about it. Let's explain and break down why, so that way we can all walk away on the same page. All right. So that was my breakdown for today from top down. Beautiful execution, 4 positions, all buys, missed out on the sells. Phenomenal trade today. Phenomenal trade today. Did anybody catch this whole entire fucking bullish move? Come on now. Somebody had to hold a runner. Did anybody hold a runner?
I wish.
Man, can't get any more clean.
For Monday as well.
I know. That's why I was comfortable closing here, because I was like, it's Monday. Mondays, I know in my journal, are my worst days. Like if you go and you look at all my months combined, I only ever lose trades on fucking Mondays. I don't know why. Mondays are my curse. This is that one. Let's see. I think the only loss I've had this month is on a fucking Monday. Mondays are ass for me if I have a bad day on a Monday. But when I have a good day on a Monday, I know that the rest of the week's gonna be cool.